What's up, guys? It is Thursday, August 4th, and this daily tea is going to be a Ripple Roundfire. So, we're going to go through any recent news as far as Ripple goes, and we'll touch upon Ripple and XRP, what they are, the difference between them. I'm sure a lot of people know here, but for people that don't, we're going to give a run through again. So, Ripple XRP is a cryptocurrency token designed to migrate transactions from central databases of financial institutions to a more open infrastructure while cutting costs. So XRP transactions are trustless, instant, and cheap, putting them at an advantage for cross-border movements. So launched in 2012, the cryptocurrency has one of the most ambitious goals in the crypto space. The software enabling the use of XRP, which is the XRP ledger, they proposed a new way of operating blockchains that proponents claim is more suitable for transactions. At launch, 100 billion XRP tokens were pre-mined and subsequently distributed to specific individuals, companies, and the general public through gifts and giveaways. At the time, the move led to concerns surrounding its decentralization as a few entities controlled a large supply of the coin. Adding fuel to the fire, XRP's involvement in the market relies on a for-profit company called Ripple that to this day acts as the main player in the XRP ecosystem. Ripple helps maintain the XRP ledger and plays a pivotal role in its development while being a significant XRP token holder. So what is XRP even used for? It was created to work. So Ripple was created to work with the XRP community to boost its use cases. It created numerous offerings over time, allowing the cryptocurrency to be used for cross-border payments, with remittance giants like MoneyGram using Ripple's products before their partnership ended. Now Stellar is working with MoneyGram. So the company has now united all of its XRP-related products into its RippleNet offering, which offers connections to hundreds of financial institutions around the world via a single API and makes moving money faster, cheaper, and more reliable. Through a service that uses XRP to source liquidity during cross-border transactions called on-demand liquidity, RippleNet eliminates the need to pre-fund accounts. Remittance players and banking giants like Santander, Bank of America, SBI Remit, American Express, Banco Rendimento, they use RippleNet. In short, Ripple's XRP-powered solution helps network members process payments with real-time settlement and improve payment efficiency and certainty. XRP itself is used to source liquidity on demand and reduce the amount in no-show accounts required to make global payments. So Ripple also funds the Interledger Protocol, a software platform that aims to facilitate transactions between cryptocurrencies and bank ledgers. The Interledger Protocol, sometimes you'll hear it as ILP, does not require the use of XRP, but it can be connected to the XRP ledger. So XRP also leverages RippleX, which allows developers, entrepreneurs to integrate blockchain technology into their applications with tools and services built on top of the XRP ledger. XRP itself can also be used on-chain as with other cryptos. So where is it being used? XRP is being used all over the world because Ripple's software is used all over the world by hundreds of the biggest financial institutions, and XRP is a borderless, neutral asset. So it doesn't belong to one country, and more of being a global digital reserve currency that these financial institutions all over the world can hold and use for when they need to do cross-currency or cross-value exchange and for liquidity purposes, that on-demand liquidity. So instead of having just money just trapped and tied up in these accounts, no-show accounts across all these different banks across the world, because they'll need it for foreign exchange transactions, instead they can unlock all that money, use it, and then just hold XRP for when they need to do that cross-currency settlement. So how? So the mission of Ripple's blockchain infrastructure, RippleNet, is to provide banks with quick, low cost, and simple cross-border transactions. As a result, it is a viable alternative to the current international payment system used by most banks, which is SWIFT. So Ripple has several benefits for those who make international transactions. So it can take 5 seconds to do an international transaction using Ripple and XRP, even at the token's all-time high price. So the transaction cost was 0.00001 XRP, which is less than a fraction of a cent. So it's always low cost for fees, extremely fast. And as a bridge currency, the XRP crypto can be used. And that allows financial firms to trade currencies at a lower cost and use XRP as that mechanism for trade instead of other fiat currencies. So to verify transactions, the XRP currency employs a consensus system involving several bank-owned servers. So validators verify that proposed transactions are valid by comparing them to the most recent version of the XRP ledger. A transaction must be accepted by the majority of validators to be verified. And RippleNet provides a multitude of cross-border payment solutions for businesses, financial institutions. So they have Xcurrent, which is a payment processing system for banks, Xrapid, which is like on-demand liquidity now, and Xvia. So Xcurrent, Xrapid, Xvia were the old kind of products they had, but they kind of merged all of them together, and now they have RippleNet, where you can access all of their products and services in one simple kind of interface. So now that we kind of know what it is now let's dive into some most recent news that has come out from Ripple. All right, so let's dive into some Ripple news. So this is just some Ripple stuff. Right here is shared kind of the connections that Ripple has into what government agencies. So you have Rosie Rios, 43rd Treasurer of the U.S. She's a advisor to Ripple. And then you have this guy, Clinton Obama administration, the White House. Then you have him, Department of the Treasury. And then you have her, I think this is Lael Bernard, the United States Federal Reserve System. And then former Ripple advisor, Michael Barr, I believe it is now, he's connected to the Treasury, but also now the Federal Reserve. He's the vice president or director of supervision of the Federal Reserve now. So you have all these huge key players, a part of key organizations, all tied up, or advisors or what have you, to Ripple, the company. So their connections run deep. And when you have connections like that, those people put things in place that couldn't have been done if you didn't have those connections. So now we have Cbdc's transaction efficiency and economic growth. This was June 15th. So a recent survey from the Bank of International Settlements found that 90% of central banks are now exploring implementing central bank digital currencies, up from just 80% in 2021. It's expected that many central banks will follow the lead of Bahamas, China, the Eastern Caribbean, and Nigeria in minting their own CbdCs. In our two most recent posts on CbdCs, we explored their potential to advance financial inclusion globally, as well as the hurdles to realizing this ideal. CbdCs and more generally digital currencies have many different applications and use cases, including as the core of more efficient transactions and drivers of economic growth. In fact, a survey of over 1,600 financial institution leaders globally cited using blockchain for payments as a key driver for efficiency. In this post, they evaluate the benefits of the technology relative to the challenges to better understand how various uses of digital currency can help accelerate economic growth and drive efficiency across industries and applications. So what are some key use cases and practical applications? Why are CbdCs gaining traction as a way to revolutionize this current monetary system? So the primary benefits of CbdCs include superior transaction efficiency as payment and settlement time is reduced, technological advantages of a decentralized blockchain working in conjunction with a centralized authority that leads creation, privacy, and distribution of digital currency, and financial inclusion through elimination of expensive third-party fees for cross-border payments and increased accessibility to payment channels. So then again, it gets into all the different use cases and benefits: small business, consumer to business transactions, business to business, economic growth, the hurdles going beyond the hype, resistance to change. So a lot of these traditional companies are reluctant to use this technology because they're making less, because they're not able to charge these exorbitant fees because now they have the technology to reduce the costs. So they're not making as much, but they're able to pass on those savings to the users, which and then users will use their platform more. So there's kind of a push-pull there. But many fintech app solutions like Klarna and Affirm are nibbling away at these entrenched behaviors by offering card-like benefits without an actual credit card, including buy now, pay later options to help ease the adoption curve. So it gets all into it, talks about cross-border payments landscape and how data is processed and relative to privacy. Talks about risk mitigation, CbdCs as a growth accelerator. So let's read this. So there's a tight relationship between the efficiency of a nation payments rails and the nation's economic growth. For example, a flatter system for cross-border payments reduces onboarding friction, cost, time, and risk. These efficiencies open new markets for local goods as well as more options for importers. A nation that's with a CbdC becomes more competitive and accessible on the world market. Additionally, when these systems are built on a distributed blockchain, two superior differences stand to benefit all parties involved: a high rate of reliability and lower cost compared to traditional systems. Reliability reduces the need for large capital expenditures and complex legal arrangements to introduce and maintain new products and services. Economic growth is then facilitated by this decreased cost, thus allowing for a greater number of and more innovative products and services to come to the market. Ultimately, these advantages can be attained and these challenges can be overcome with the right teams and technology in place. There will be undoubtedly a range of digital currency solutions put forward, with some nations favoring public-private partnerships while others lean into government-led CBDC efforts or even a hybrid of the two. But whatever the final form, the potential for economic growth and greater efficiency is simply too large to allow near-term hurdles to hold back innovation. So then you can download their white paper to learn more about the solution. I'd have to put my stuff in. So we will pass on that for now. But FOMO Pay to utilize Ripple's on-demand liquidity for crypto-enabled treasury management. So Ripple, the leader in enterprise blockchain and crypto solutions, today announced a partnership with Singapore-based major payments institution, FOMO Pay, which will utilize Ripple's crypto-enabled enterprise technology to improve its cross-border treasury flows. On-demand liquidity leverages XRP, the digital asset built for payments, as a bridge between two fiat currencies, enabling instant, low-cost settlement without the need to hold pre-funded capital in a destination market. Game changer. Historically, ODL has been primarily utilized for cross-border payments to help payment service providers and small to medium enterprises manage trapped capital that could be better deployed to help grow and scale their businesses. However, traditional treasury payments are subject to the same pain points and friction as cross-border payments due to the archaic infrastructure that correspondent banking relies on. In fact, an estimated $3.5 billion is spent annually to address issues associated with treasury and liquidity. By leveraging ODL on-demand liquidity for treasury payments, FOMO Pay is able to get 24/7 all year-round access to liquidity for euro and US dollar, thereby enabling same-day settlement globally. ODL for treasury payments makes it easier for PSPs like FOMO Pay to improve internal business cash flows, thereby allowing them to reduce business costs and improve operations. Prior to using ODL, FOMO Pay's treasury managers had to use other modes of payments in Europe and USD and Euro and USD, where funds would take 1 to 2 days to reach destination accounts. As one of the leading payment institutions in Singapore, FOMO Pay aims to provide our clients with more efficient and cost-effective payment modes in digital currencies. We're excited to partner with Ripple to leverage on-demand liquidity for treasury management, which allow us to achieve affordable and instant settlement in euros and USD globally. With the Asia-Pacific region teaming up with opportunities to solve existing silos and inefficiencies with payments, we're seeing many forward-looking financial institutions clamoring for the next evolution of payment infrastructures, and notably based on crypto and blockchain technologies. That's why we're so excited to launch this crypto-enabled treasury management use case for ODL with innovative customers like FOMO Pay. So Ripple was the first enterprise company to leverage crypto to tackle $1 trillion challenges with cross-border payments. They're solving $1 trillion problem, and their token is used to solve that problem and necessary to solve that problem. And there's a limited supply of that token. The end game is clear, guys. That price is going to skyrocket. But RippleNet leverages blockchain technology to help partners across a global network accelerate their business performance and scale. It delivers a superior end customer experience, simplified network partnering, liquidity management solutions, lines of credit, and state-of-the-art infrastructure to enable real-time payments. FOMO Pay joins companies including Azimo, Novati, FlashFX, iRemit, Tranglo, SBI Remit, PayPal kind of thing, and more, who are realizing the benefits of ODL for their business and customers. Game-changing stuff, guys. We're really living in one of the greatest times as far as, like, this is such a huge... They've been trying to solve, and I'll get to it, as far as the holy grail for cross-border payments. But in that report, they were literally saying that they've been trying to solve this problem for thousands of years, and within the next 10 years, they see it happening. And we know what it's going to be, like, hands down. There's no question in my mind. So it's truly too good to be true. It really is. It's hard to really comprehend what is about to happen as far as Ripple XRP goes. But after we read that report from the ECB, I think we're going to know exactly what's going to happen. but piercing together Latin America's fractured treasury flows. Just another one, right? So the world economy is becoming increasingly globalized as industries evolve and businesses expand into new markets. Unfortunately, the flow of funds across international borders has struggled to modernize alongside the rapid pace of globalization. Smaller businesses in the Latin American region are particularly burdened with challenges associated with expansion, particularly around opening and managing treasury accounts in their countries. Liquidity is vital to the success and development of a business, but the current methodology of sourcing liquidity to open new treasury accounts is a heavy toll on small enterprises. In this piece, we'll explore the fractured process of cross-border treasury flows, the specific challenges and limitations in Latin America, and the financial players that are especially disadvantaged by the current system. Here we go. So moving money across borders, treasury or not, can be an expensive, opaque, and time-consuming process. Today, there are trillions of dollars worth of just trapped capital in what they call nostro-vostro accounts around the world. While large financial institutions may have the resources to maintain operations and services as additional funds sit in foreign treasury accounts, it is still a cumbersome responsibility to forecast when and where the capital will be needed, and of course, freeing that capital will provide the financial institutions greater flexibility. These hurdles are insurmountable for smaller enterprises that heavily rely on precious capital resources to meet their business needs. FIs are also able to carry the responsibility of identifying, managing financial requirements for foreign treasury accounts, which can vary from country to country. SMEs, on the other hand, don't always have the capacity to dedicate an entire team to proactively respond to these requirements, and are often surprised to discover the lengthy process of opening an additional account. Moving treasury funds into foreign accounts is often accompanied by high cross-border transaction fees, another unwelcome surprise for expanding businesses, which can interfere with business growth. The marginal cost of a cross-border capital flow carried out by SME tends to be much larger than costs for FIs that have the opportunity to leverage large volume wholesale treasury deals. Slow transaction times, on average 3 to 5 business days, and a lack of a fee and FX transparency are prevalent regardless of business size, and may even risk customer satisfaction and loyalty should there be extensive delays like those caused by COVID-19. So the challenge, they're talking about particular challenges in Latin America, and this is going to be big because it gets into something that I wanted to talk about as well too. So historically, international banks have moved in and out of Latin America at a rapid pace, responding to factors which make running a bank in this region so expensive, like the need for physical branches and adapting to rigid financial infrastructures. These sudden closures force businesses to scramble to find another bank and open a new treasury account, costing time and resources, which inevitably impact the business performance. In addition, Basel III's liquidity coverage ratio, that's what I want to talk about, advises banks to adhere to a minimum 100% LCR, which I believe is lending cost ratio, something like that. LCR, liquidity coverage ratio. Okay. Advises banks to adhere to a minimum 100% liquidity coverage ratio, which may limit the types of customers they choose to do business with, potentially ruling out SMEs that are unable to source liquidity for foreign treasury accounts. Suffice to say, it's extremely difficult to meet the market demand and grow their businesses with the existing system for opening and managing multiple treasury accounts. Compounding these vulnerabilities, World Bank evidence states that only 45% of small enterprises in Latin America have access to credit, a major component of liquidity sourcing. So let's keep going here. So seizing opportunities. Ongoing volatility challenges expressed previously have primed Latin American financial players to evolve and adapt to rapidly changing circumstances. Adoption and access to digital financial services increased in response to the difficulties faced during the pandemic. Millions opened first-time bank accounts. In addition, the number of Latin American startups is growing and investment in business is skyrocketing. Prioritizing innovation and modernization is key to growing and even sustaining a business in this region. So let's keep going. So nations have also been brought together through formal gatherings like the Pacific Alliance, founded in 2011, to enable free trade, an industry which involves many of the same difficulty as treasury flows, and streamline foreign exchange between Chile, Colombia, Mexico, and Peru, which comprise about 50% of the trade in the region. Various leaders in Latin America attend as observers with the hopes of integrating into the alliance in the future. In 2016, Alliance made strides to enable progressive trade by reducing tariffs on 92% of goods, providing capital to new businesses, and establishing a path for public-private partnerships to create innovative solutions for SME export capacity. So Ripple's new value report found that 87% of respondents at financial institutions in Latin America believe blockchain will have a massive or significant impact on business in the next 5 years. The region is clearly keen to see the results, and exploration and adoption of new fintech solutions is a profitable next step towards streamlining and advancing the fractured system. The legacy payment rails that enable cross-border treasury flows have continued to stymie growth for the majority of financial players in this region, especially SMEs. While larger financial institutions have the capital advantages to invest in research and development projects like technology innovation, SMEs have the opportunity to leverage the technical and financial expertise as well as affordable lines of credit provided by fintech companies, allowing businesses of all sizes to integrate these solutions into their operations. Ripple's crypto-enabled payment solution provides businesses the opportunity to send money across borders without the need for pre-funding destination accounts. Simple and expensive real-time transactions provide efficiency and transparency to focus on maximizing the value of resources and scaling businesses big and small. Whew, that's a lot. That is a lot. But all great stuff. An accelerated shift to instant payments across Europe. It's like the whole world is like getting ready to go right now. So instant payments are posed to become the foundation of consumer and business transactions across the European Union and United Kingdom. In the UK, the Bank of England is renewing its real-time gross settlement service to deliver a range of new features and capabilities for payments and settlements between financial institutions. The UK's new payments architecture for retail payments is also being developed to enable access to a single clearing and settlement mechanism, using ISO 222 messaging to enable more participants to utilize the UK payments infrastructure and continue to be interoperable with payment services across the globe. So in the UK, the faster payment system enables payments to move quickly and securely to and between UK bank accounts 24 hours a day. In 2021 alone, processed like 2.6 trillion. Expanding crypto forward solutions like Ripple's crypto payment solution, which frees up working capital by eliminating the need for pre-funding and removes the need for complex clearing mechanisms in the background, can open up new doors to make instant payments available to more payment service providers. Embracing this crypto strategy would further enable instant payments across Europe regardless of currency symmetry or capital resources. So the second movement is the rise of interest in CBDCs, not only across Europe but worldwide. Over 90% of central banks globally are researching or piloting CBDCs. The technology offers myriad of benefits, including streamlining payments for domestic fiscal policy. Bank of England, Sweden's Riksbank, and the European Central Bank are all exploring CBDCs with a focus on data privacy and financial inclusion. Sweden, a highly digitized economy already, has seen a massive decline of cash use in recent years. As a result of proactive research, Sweden has emerged at the global forefront of the CBDC movement. Other parts of the world are exploring digital currency solutions, including the Republic of Palau, Bhutan, Mexico, China. The introduction of CBDCs throughout such diverse economies will have far-reaching economic impacts, such as greater financial inclusion, increased innovation opportunities, and improved efficiency. So it talks about the obstacles overcome. Talking about regulators worldwide are pushing for instant payments and for open banking adoption, but to arrive at the future of cross-border payments, further alignment is vital. So instant payment technologies coupled with clear regulation can help streamline and digitize the financial industry across the region, increasing competition and innovation in the space to position Europe as a leader in the global economy. Nice. Okay. So now we got how financial intermediaries can integrate crypto assets. As many as 65 million banking customers in the US alone would interact with digital assets through their bank if they could. But financial institutions need to consider the technical and organizational requirements necessary to offer crypto-enabled services successfully and strategically. It's a whole report. So I'm not going to download that, but they're talking about navigating crypto. And then the stand is finally out of tacos. So the past weekend, Jed McCaleb sold the last of his XRP in his taco stand wallet. For context, he originally owned 9 billion units of XRP in 2012 when the XRP ledger was created. That's around a tenth of the supply. So many of you closely follow and are interested in Jed's XRP holdings, so we want to take the opportunity to mark the occasion by providing some background on Jed's ownership of XRP and the distribution of one of the largest individual holdings of the digital asset. So Jed McCaleb was one of the co-founders of XRP. He's now the founder of XLM. He was the the founder of Mt. Gox, which was the first Bitcoin crypto exchange back around like 2015. It was the one that kind of lost customer funds, and it caused like a huge kind of bad sentiment in crypto back in 2015, and bad taste was in everybody's mouth. They lost a lot of Bitcoin on that exchange. It was the main one. And so now he's been selling systematically his XRP holdings. That was a part of his deal when leaving Ripple, and he finally ran out of all the XRP that he had in his wallet. So despite all the drama, developers and entrepreneurs independent from Ripple have continued to build on the XRP ledger, taking advantage of its native attributes and unique functionalities to move value. Today, the XRP ledger supports hundreds of use cases, from cross-border payments and custody to marketplaces and NFTs. Ripple has been in business for 10 years, and this is only the beginning. We continue to be inspired by and are in awe of the XRP community, and look forward to continuing to building a new future together. So now there's not going to be that selling pressure all the time, because like every day it'd be like millions of XRP selling out of there based on what the price is, but it was supposed to be a percentage of his holdings that he got to sell every day, and now he's finally out, so he's not selling. Meanwhile, Ripple is buying XRP on the open market, so that's causing this supply crunch because there's not that selling from Jed McCaleb in the millions of XRPs, and so there's less crypto going to the exchange. And at the same time, Ripple, a behemoth, is buying XRP on the exchange, so less XRP to sell, and on that end, because he's not selling anymore, as well as less XRP to buy because Ripple's buying a ton of it. So huge supply crunch going on, but unlocking 120 billion value in cross-border payments, how banks can leverage central bank digital currency for corporates. It's a whole thing here. Talks about multiple central bank digital currencies, design and implementation, the business case for multiple central bank digital currencies, alternative complicated models, technology and upgrades, liquidity providers. Let me see if I can do a couple searches real quick. But this is, I think, by JP Morgan as well too. Ripple. So right here, right there. So commercial efforts and central bank initiatives. CLS, a multi-currency FX net settlement system intended to eliminate settlement risk through FX payment versus payment. 18 currencies supported, everything like that. Swift talks about that, Finality, and then Ripple, cross-border payments infrastructure intended to use cryptocurrency XRP as a settlement instrument, and high volatility of XRP leading to a limited willingness from banks in using it to facilitate payments, relatively high costs owing to spreads between fiat and XRP. But since XRP is so fast, that volatility is not really existent. So the Ripple CEO has done a debunk of volatility of XRP and like why that's not the case. But transparency, instant settlement, and then that as well too. Project Dunbar, yep, it goes through all that stuff. Great stuff. So they're right in there. Let me see if I can see if there's any other coins. So yeah, so right in that JP Morgan report, Onyx. And then we have Ripple buys, this is what I was talking about. Ripple buy back millions of XRP off secondary market as on-demand liquidity gains global momentum. So leading blockchain company Ripple disclosed in its recently published Q2 2022 financial report that it has been buying XRP off the secondary market. The blockchain company noted that the purpose of the XRP buyback initiative is to sell the acquired crypto asset to on-demand liquidity businesses to financial institutions. And the volume of ODL surged 9 times year over year. So Ripple has been a buyer of XRP in the secondary market and expects to continue to undertake purchases at future market prices as ODL continues to gain global momentum. Huge. So we have that supply crunch. So now we have SBI CEO. Every bank in Japan will use Ripple's XRP by 2025. And Ripple's XRP token currently bears further uplifting news as SBI, which is a Ripple enthusiast, has planned to have a few banks in Japan and utilize the token by 2025 Osaka Expo. So he said that the use of XRP is getting widespread, and the number of companies participating in Ripple Nets is increasing substantially. Therefore, in such a meaning, it seems that the use of Ripple's technology will gradually become used in the form of using XRP in the international money transfer field. Virtual currency is tough unless there is real demand, but we believe firm, real demand will come out from now on. There we go. Talking about how there's basically no value for Bitcoin, because what is it providing in the sense of its use case? What is it solving? So XRP is the one, guys. XRP, and this is SBI Group. They're the ones that's like the president or CEO of it, and this is their kind of report. And on-demand liquidity you see in there. You see Ripple in there. A lot of Japanese in there, but this is actually a Ripple diagram as well too. You see XRP. This is XXX, and then you see the different payment service providers, and then to the people, to the crypto exchanges. So that's how they kind of do the instant settlement. So let's keep going. Oh, another one. Here we go. So you see the X. There we go. So you have the one to the Philippine peso, or I think it is. It looks like, and using on-demand liquidity, that's how they do it. So XRP network has just hit a huge milestone. So right here, XRP network has hit a huge milestone. The amount of unique addresses currently interacting on the network has exceeded 247,000 in just a 4-hour window. This is the highest spike recorded since February 2020. New XRP addresses created remain steady. So all of a sudden, bam, spike as far as unique addresses. So this is definitely a big milestone as far as like in this bear market and everything like that. You see that breakout of adoption right there, and that spike higher than these points. Usually that coincides with price catching up to it. So let us keep going. We have opening up to new horizons, digital assets as a means of settlement and cross-border transactions. So 2021 was the year cryptocurrencies and digital assets passed an inflection point where we can no longer deny the growing use cases and interest in the technology, a trend that seems to be only gaining momentum in 2022. From major food and beverage chains like Starbucks to technology companies like Twitch and Microsoft, we have seen a rise in enterprises accepting crypto-enabled payments. So it talks about reframing digital assets as a means of settlement. Cross-border payments are known to be costly, full of friction, and slow. Globally, $120 billion in transaction costs is spent each year to facilitate such international transactions. As a result, landscape is still highly fragmented, resulting in inefficient cross-border transactions despite close economic and social ties. A significant cause of this friction is correspondent relationships, a network of bilateral accounts-based relationships used to process cross-border payments. Although widely proliferated, the market structure of correspondent accounts injects significant friction, delay, costs in processing payments, primarily due to the need to pre-fund these accounts. Talks about the World Bank and some data there, and then we're already seeing these benefits in action. Tranglo, a cross-border payment specialist in Asia Pacific, has seen 48 million worth of transactions completed via Ripple's on-demand liquidity solution within the first 100 days of its deployment, validating customers' preference for faster and cheaper solutions. So clearly, digital assets can offer a compelling alternative to the incumbent correspondent banking model for businesses. To turn this vision into reality, it is important for policymakers and regulators to facilitate the use of digital assets as a means of settlement alongside other use cases to help support innovation in the sector. For starters, we will need a clear regulatory framework that differentiates between different types of digital assets. Such a framework which supports the use of digital assets as a means of settlement can help assist in faster and more efficient cross-border payments. To provide clarity, digital assets should be classified based on their functionality and economic purpose, similar to the approaches taken in countries like Singapore and the UK. In line with such practices, we recommend that there be a clear distinction between payment tokens as a means of settlement, utility tokens, and security tokens. So let's talk about building bridges in a fragmented system. Talks about digital assets have the potential to transform the global financial system into a more inclusive, transparent, and fairer ecosystem. Look no further than digital assets as a means of settlement for cross-border payments to witness the tangible benefits to end users. Naturally, as digital assets gain traction on a global scale, governments across Asia Pacific will need to explore new regulatory approaches to harness and unlock their potential while managing the associated risks. Regulators, policymakers, and the industry must come together to build a forward-looking and flexible regulatory system. Only then will a more dynamic, responsive, and inclusive payment system be within the reach of the masses. There we go. So Ripple CEO Brad Garlinghouse says that ACCELERATORs operate in the dark. He's just saying that they're doing enforcement regulation by enforcement, which is just kind of going after people and saying, oh, we told you that these were the things that you needed to abide by, but they didn't. They're kind of saying their rules and behind the scenes, but out in the open, they're not saying it, and then they're just attacking certain crypto companies for going against their rules that they don't know. So we'll skip that. Then we had Brack Bank TerraPay to enable fast cross-border payments. A partnership. Brack Bank on Thursday has announced a partnership with global payments infrastructure company TerraPay, and TerraPay is, I believe, a Ripple partner as well too. So just all these connections being put together. So MENA, leapfrogging towards a digital currency future. So the rise of fintech across the Middle East and North America region is well underway as the world increasingly trends towards green energy solutions and profits from oil exports decline. Many countries are looking to diversify their economies away from fossil fuels. So that green finance, So numerous countries have looked to fintech to bolster development from an industry standpoint and to drive greater financial access to their populations. So it's talking about CBDCs, what they are, and the opportunity, regional adoption. So many countries' shifts showcase why MENA is primed to be a leader in CBDCs. For example, the United Arab Emirates and Saudi Arabia have recently partnered on a project Aber, which aims to explore domestic and cross-border settlements using a single regional currency. What sets this apart from other global CBDC research projects is that it is first dual-issued CBDC implemented on a blockchain, enabling fast, low-cost, efficient payment rails superior to the current SWIFT platform utilized by between these two countries. The Central Bank of Israel also last year began testing a digital shekel, talking about all these countries doing it. So these younger generations also understand the need for technological advancements to create economic opportunity, are calling for change, and institutions like the World Bank are listening. So opportunities and what's next, it says, the ability to transform the region's economic trajectory in this way presents an opportunity for central banks across MENA to follow suit by being early adopters of CBDCs to leapfrog the transition to digital currency. The ability to interact with blockchain-based CBDCs through mobile devices, which is estimated to reach 80% of the population by 2025, that's the timeline, guys, would also help drive financial inclusion in rural and underserved areas across the region. Ultimately, the introduction of CBDCs will be a defining moment in the history of money, covering in Agartha, guys, and will position first movers as forward-facing fintech leaders, and the MENA region is particularly well poised to be at the vanguard of this moment. Ripple is a proud partner in many endeavors around merging digital currencies. This includes being a member of the Digital Pound Foundation, as well as working with Bhutan around financial inclusion and sustainability in CBDCs, and the Republic of Palau to develop a stablecoin strategy. So, it's nuts. It's nuts. So institutional investors bet on SOL and XRP while shorting Bitcoin. This is back in July 20th, so kind of old. We'll skip that. And then we have, so there is talk of a coming Federal Reserve digital dollar going on the back of XRP. This is David Morgan, worldwide keynote speaker, precious metal analyst, and founder of the Morgan Report. That's what he said. So right there. So everybody's starting to catch on to what's going on. So then we're excited to be shortlisted in the Bank of International Settlements and Bank of Indonesia G20 Challenge for our central bank digital currency solution. 90% of central banks are exploring CBDCs, and we know their potential to advance financial inclusions and the hurdles to adopt them. So right here. So BIS Innovation Hub, Bank of Indonesia announced finalists at G20 Tech Sprint CBDC Challenge. If I open this up. Oh, okay. So the shortlist finalists. So they're announced winners in October of this year. So we'll know by that time. But Ripple was a shortlist finalist. So there we go. Yep, shortlisted. Yep. And then we got, so we are excited to build on our partnership with Thunes Payments, extending RippleNet services into Morocco and the greater MENA region. So one of the largest banks in Morocco and Africa, partnership enables seamless bank-to-bank payments to all bank accounts in Morocco, a huge improvement for customers that need to make regular cross-border payments. So there we go, another country on board. And this is Chris Larsen, and he's the chairman of Ripple, but I just found an article that, or a document that says that he resigned yesterday. So there might be something at play there as far as he's one of the ones that was labeled in lawsuit by the SEC. So maybe it's a part of a settlement deal. So who knows? But we'll see. But let's hear what he has to say.
Job these days. So I mean, we just can't ignore what's going on in our own industry in crypto, and in particular with Bitcoin mining. It's a problem. The climate is, we're in crisis, and we've got to address it. And again, we hope we can get it to neutral, which is where most of the industry is today, carbon neutral, but maybe even get it to massively carbon negative. I think there's an opportunity that only Bitcoin has, and that's kind of exciting, but that will take a long time. Job these days. So I mean, we just can't.
So he's the one that was talking about changing Bitcoin's code. That has to go away from proof of work. This all goes with the green finance, sustainable finance, and all that. So then we have Michael S. Barr sworn in as vice chair for supervision of the Board of Governors of the Federal Reserve System. He was a Ripple advisor. He was on the board of directors, and now he's sworn in as vice chair for supervision of the Board of Governors of the Federal Reserve. And he's right there, shaking the hand of the Jerome Powell, the president of the Federal Reserve. Now we got, in March, the Sharia Review Bureau concluded the XRP token as Sharia compliant utility and can be deemed Sharia compliant. Next report overview of XRP does describe the network as permission. Also check out the use cases described. So here we go. We have XRP is also used to provide on-demand liquidity for Ripple's flagship RippleNet service, a global payments network of financial institutions that was originally 3 separate products prior to 2019. Xcurrent, Xrapid, XVIA, which we originally said at the beginning of this video, but they branded it under RippleNet now. But other use cases for XRP: Forex, foreign exchange, escrow, real-time gross settlement. Remember the UK real-time gross settlement service they're renewing? Could be at play. Payment for digital goods and other near instantly products and services. Peer-to-peer purchases, central bank IOUs, decentralized exchange, online voting. So being Sharia compliant is a must for coins that are going to be here and be used in the future. All right, then we have Ripple Managing Director Cindy Young fields a price question about XRP in regards to its performance as a bridge currency. So let's hear it.
One of the top tokens for this to work.
Yeah. So, I mean, again, I would say we're not, really so much focused on the particular sort of price of XRP or the volatility or any other coin particularly.
That doesn't matter. It doesn't matter if it has a higher or lower market cap.
So if we look at our, again, on the on-demand liquidity solution, RippleNet, where we are using XRP as a bridge currency, right, to move fiat, around the world, right? That is, regardless of the price of XRP.
All that matters is how many there are. Doesn't matter what the price is.
It's a bridge that we are using as a bridge. So it's not, we're not here really to honestly like speculate and it's a means to enhance, a means to bring that efficiency to the market. So and again, I mean, when these things happen, obviously like prices drop, etc. For me, what's interesting is when I talk to one of our customers, partners, and the benefits they see, right? A customer, Asmo is a great example. So one of the big remittance companies, when they can enable their payments, I don't know, Filipino worker paying, from the UK, sending money to their family to pay for food or housing or hospital or whatever it is, and they can do that at a fraction of the cost. At that for me is where the big value is. As opposed to how much XRP is in circulation or not, and I mean.
Well, good. Right answer.
Dodges the question, but at the end of the day, what she's saying is use cases, utility will bring massive value, especially when you're solving the cross-border payment bridge currency issue, and it's so true. It's hard to believe when the price isn't doing anything, but it's going to be too late by the time that the price does move. But we're focused on tackling CBDCs as the future of fiat. Key to this will be our work with central banks that support the direct exchange of CBDCs on the XRP ledger, using XRP as a bridge currency. So XRP is that central bank money it's the banker's coin, that it's gold for them because they hold it and it's used to do cross-currency conversions. Every central bank in the world holds it, so they apply a value to it, and then bam, there it is right there. So then we got XRP is the secret sauce,
which is not owned by Ripple. XRP is not Ripple. XRP, which is not owned by Ripple. XRP is not Ripple. Ripple is not XRP. If you own a unit of XRP, it gives you no right, title, or interest to Ripple. If you want to own Ripple, go into the secondary market and you can buy some shares in Ripple and become an investor in Ripple. But what XRP does, and this is really what I think is fascinating, is when you combine XRP with RippleNet, the proprietary software solution, I think it does something really magical. It's really the secret sauce. It's liquidity on demand. XRP...
It's the secret sauce. The secret sauce, XRP. Yes, you can use other cryptocurrencies within RippleNet, but XRP was designed to be used within RippleNet software. So it's a secret sauce and it's on-demand liquidity. And on-demand liquidity in a world where there's liquidity issues seems like the perfect problem reaction solution to usher XRP in as the global digital reserve currency. So Thinking Crypto interviewed Joel Katz, CTO of Ripple, and David answered a question that we all wondered in the XRP community. Will the value of XRP be the same on the private ledger as it is on the public ledger? Because there's a Cbdc private ledger that Ripple has that these central banks are testing their central bank digital currencies on. But one day, the private ledger will be merged with the public ledger. And then we'll see the true price of XRP at that point. Because right now, they could be trading XRP for $2,000 per coin on the private ledger with these central bank digital currency initiatives and pilots. But when all is said and done and it's merged together, we're going to find out in snap of the finger what the true price of XRP is. And I definitely think it's in the thousands. So let's keep going.
There was another question that came up, and I don't know if this makes sense, but the question is, will the value of XRP be the same in the private ledgers as it is on the public?
Yes. The value proposition of XRP is that it has these liquidity pools. It doesn't make sense to isolate something. Like there's no place where gold is worth twice as much as it is now, because if there was, people would just bring gold there and they would buy gold somewhere else and they would sell it there. Unless the only way that you can have the value be very different in two places is if there's a lot of friction. And if there's friction, someone will make a business of removing that friction. So I don't see any realistic scenario where XRP has significantly different value unless something's wrong. So like a good example of a case, there was a time where the value of XRP, they called it the kimchi premium, right? Where the value of XRP in some Asian countries was very high, but that was because there were capital controls, right? That was because things were bad. I think that's a sign that something is not going well. The value proposition of XRP is that you can take it to all of the places, right? If I sell you some gold and you say, hey, this gold can only be used in jewelry, you're like, well, that kind of sucks. I don't want that gold, right? The value proposition of gold is that you have access to the entire value proposition of gold. And so I don't see any scenario in which where it makes sense to snip pieces off, again, unless something is wrong.
There we go, from the horse's mouth, comparing XRP to gold. XRP is a digital gold, guys. I'm calling it. By the end of 2022, early next year, what can we expect? Growth in nodes on the network may be incremental, but their effect is step change because after a while you achieve critical mass. Okay, let's...
For you. This question is, I guess it's June 2022. If we speak again, let's say at the end of the calendar year or the early next year, what will have changed for you?
So for us, the scale would have continued, right? So in terms of things that we talked about, 8x growth, 15 billion, you would see a much bigger number at the end of the year because we are growing very, very fast. You would find a lot more nodes on the network. And what I want to say is normally though the growth on the nodes on the network may be incremental, but their effect is step change because after a while you achieve critical mass or escape velocity, and then it essentially moves together very, very quickly, right? So both are these two things that I'm very excited about. And then when we should be able to talk, I should be able to cite examples and take you through how that journey has been.
Okay, so
it moved very, very quickly. So with that, price will too. Then we have the discussion of infrastructure challenges, especially on the Basel III liquidity coverage ratio effect on SME access, is both interesting and new. So that was in that report that I had said earlier that was with the Basel III liquidity coverage ratio, liquidity risk monitoring tools, that is going into effect January 1st, 2023. and it is going to be something definitely to keep an eye on. I'm going to do a whole video on it because it's a lot. Then we have the Payment Association as a digital currency education project backed by MC, seeking to produce thought leadership content in which they distinguish XRP stablecoins from volatile assets like Bitcoin. So 2 different ball games we're playing here. Right here, the role of Cbdc, stablecoins, how digital currencies differ from each other, electronic money versus stablecoin versus crypto, how can digital assets improve the traditional financial system through real-time settlement, cash liquidity and remittances, how Bitcoin/volatile assets differs to XRP and stablecoins, the difference between the consumer-facing applications and treasury management, how digital currency can be used for cross-border payments and other use cases, and all that good stuff. So, wow, they're really just putting it in a different category now. So MUFG, this is a Japanese bank, I'm pretty sure. They're initial Ripple investor as well. Let's hear what they say.
More about how we're using this and why it's important to us. You might be asking, why does this really matter to us as a bank? Well, we operate in more than 50 countries as a bank around the world. So more than 50 countries have branches and operations, and we have to move money between all of those operations every day, and significant amounts of money. We've got a number of multinational corporates that operate across all of those. So there are huge liquidity flows occurring every day. Today, for many of us, we may have to go through kind of SWIFT and incur charges. Many intermediary banks are part of that. And typically an SLA for fund transfer movements is between 1 and 3 days. Using technologies such as Ripple, we can get that down to something like 30 seconds, which is significantly different and at a cheaper cost as well. So it's not just the time saving, but the cost as well in terms of moving money between our branches, between our different countries within our network. That's really important to us. We have solutions to do this today, of course, but we're always looking at how we can kind of bring them up to date, make them more efficient, more effective, because by reducing the kind of operating costs for a bank, we can reduce our costs, compete more effectively in the market. So this is a really important use case for us. Ripple's one of the solutions that we're considering, not the only one, but one that works.
It's just one that works. Like, from the horse's mouth, every single institution across the whole entire world in all different arrays of industries are sound the alarm on Ripple and XRP. So Cointelegraph highlighted our CTO, Joel Katz. He says that XRP Ledger provides a fast, low-cost, sustainable solution that's better for business, consumers, and the environment. So how can carbon-neutral crypto enable fast and more sustainable payments? So it talks about the traditional payments infrastructure is slow, costly, and resource-intensive. Talks about when it comes to cross-border payments, the current system is even more painful. Talks about the problems there, but Ripple's cross-border payment solution uses the XRP Ledger, the first major blockchain to become carbon neutral, and its native digital asset XRP, which was purpose-built for payments and doesn't require mining, to provide a fast, low-cost, sustainable solution that's better for business, consumers, and the environment, with assets tokenized on the XRPL made green from the get-go. Crazy. Enabling real-time payments and near instant settlement with fixed foreign exchange rates, absent of any market volatility or risk to profits. At Ripple, not only are we committed to being carbon net zero by 2030, we are also committed to delivering on our mission of enabling a world without economic borders. By 2030, guys, this is going to happen, and it will be the best investment opportunity of our lifetimes, and I can hands down confidently say that. The future of cross-border payments with Brendan Barry. This is BoweryCap.com. I'm not sure. The Bowery Capital team sat down with Brendan Barry, Director of Product Management at Ripple, to discuss the state of cross-border payments. Ripple is a cryptocurrency company which leverages a digital asset in order to help companies move money across borders. Prior to Ripple, Brendan spent time on product teams at Amazon and Slack. So it talks about the cross-border payment flows, all the same problems that we always read about. We talk about how blockchain and cryptocurrency can fix that problem, and how XRP is being a bridge between two fiat currencies, enabling both movement of funds between parties and currencies. It talks about one of the most important factors in settlement. The traditional manner of preemptively parking funds, which can be incredibly expensive, is an estimated $10 trillion market, but through using a digital currency, one can settle these transactions instantaneously in real time. $10 trillion, even that flowing through XRP is huge price points. Talks about top 5 banks control nearly half the world's total fiat liquidity, and it makes sense that big banks are able to provide settlement services for very large volume payments, while others have not been able to do so. There are large transfers to any countries, especially outside of a G20 currency. This becomes a really complicated issue to solve. Liquidity is a gating factor when you think about growth in cross-border payments. So how Ripple's solving it, what makes the solution unique, and they're at the forefront of it. And then we have activity on Ripple reaches critical levels. That was what we saw as far as the last article we did about the highest addresses network uses. And yeah, guys, so that is it. And then in the next video, I'm going to cover ECB, the holy grail of cross-border payments. And I will cover the Basel III as well, too. We will cover towards the holy grail cross-border payments, Basel III, and a couple other things that I found for the first time in a while. Did a deep dive and found some crazy stuff that I've never seen before. So we're going to cover that in that video, and I'll see you in that one.